Almost there. All right, we're there. Let me just put this here, paste that here. Okay. And we are about as live can get. Let me just share my screen here and we can get this party started. Move this here, that there, move this back here. Here we go. Hey, Brian, good morning. Sergey, good morning. Awesome, good morning. Angie, Dave, Roddy. Hope you're feeling better, Roddy. Timothy, Cam, hello there. Infinitely, Robert, Keith, Henry, Gary. Flying Ronan is in the house. JB's in the house. Good morning, good morning, good morning, everybody. Hope everybody is having a nice day so far. The day just got started. Hopefully nobody ruined it for you just yet. Let me repost something here for you. Happy Tuesday, everybody. Now, folks, get my top predictions, my top sectors, and best of all, my number one stock live at 1 p.m. today, Eastern time. You don't want to miss out. It's going to be very, very cool. Kirk, good morning to you. Good morning, everybody. As you guys know, I usually give the room about 100 members to fill up before we start. We have about 97 in. We're going to be starting in just a minute. Daniel, good morning. Hope everybody's doing great. I do have a lot to talk to you guys about today. Let me share my screen so that we can really get into it. Okay. The Costco thing, of course, it was April 1st. Costco. Yes. All right. Let's get into the nitty-gritty. First of all, before we get too deep into anything, I want to bring something to your attention. They put, obviously they don't have any sense of relevancy, so they put this on the bottom. But I wanted to point this to you because we've been seeing a lot of upside in healthcare stocks lately, right? Sigma, United Healthcare. So I wanted to bring this to your attention. Healthcare stocks are falling in pre-market trading after the industry regulator announced on Monday. I think this happened after the close that U.S. payments to Medicare are going to rise by 3.7%. I don't think that's bad, honestly, but the market didn't respect that. So it'll be interesting to see. Keep your eye on healthcare stocks the first hour of the day. And then I hate to say I told you so, but remember Humana? I gave you the stock. This was my biggest loser. So for those that are new here, Humana was my number one down stock for 2024 on Christmas. Folks asked me what's my most bearish stock, and I said it's this stock right here. And let me just show you what happened to the stock since December. Let's see. Yeah, right here. So I told folks right about here to get rid of this stock, to dump this stock right around here, right here, right here. Actually, right here, right here. And well, you could see how it did. It only dropped about 100 and it only dropped about 100 points since we talked about it. Only 100 points. And if you guys don't remember, it was turning point for 2024. Humana, the worst stock of 2024. So you guys could see exactly how it performed. Good morning. Yeah, so keep an eye. Let's see how the healthcare stocks do today. But that's a major factor that I wanted to bring to your attention. So if you have a weak healthcare stock, you may want to see if it's bearish. If you have a strong stock, see if it pulls back enough for us to get a little angle in. And I'll be monitoring it via the trading pit all day today. Another major announcement, not a major announcement, but Leonard Homes got downgraded. Remember, these home builders, they're very incestuous. If one gets impacted, the other one gets impacted. And I'm pretty bullish right now on Pulte Homes and all of these stocks. So keep your eye. This may give us an opportunity to go long some of these stocks for a swing trade. So the two sectors that I want you guys to keep an eye on today, and fortunately or unfortunately, depending on how you look at it, But you got to keep your eye on healthcare stocks today, and you got to keep your eye on home builder stocks today. Both of those sectors have been really gearing up and leading the market. So without those stocks, it'll be very interesting to see if tech can gain some traction. I'll come back into global economy, but I wanted to bring this to your attention because this can impact you ASAP this morning, like early in the morning. Okay. So we are down. We're down about 200 points on the Dow. I would imagine the healthcare sector and the healthcare sector has the biggest impact, and the home builders as of right now. 200 points on the Dow is nothing significant, but 90 points on the NASDAQ is significant. So the question is, are we going to have a turnaround, or are we going to open it with a gap down? Now, gap downs are some of the best trades for when markets gap down. I'm always looking at the strongest stocks. So what you want to do is, as I give you this list later today in our broadcast, what you want to do is you want to write these down, and you want to keep an eye on them, and you want to look at them on a 60-minute and 30-minute basis. And you're going to see the market gap down and open down today. So what you want to see is this. You want to see a gap down. You want to see it go like this, and then towards the midday, not end of day, even end of day, but what you want to see is a turnaround and the market saying, okay, we made a new low, and now we're breaking up higher and we're ending the day on a high note. You want to see something like this, especially on Tuesday, because Tuesday and Wednesday are considered fairly strong days of the week for the stock market. So we definitely want to see that. As of right now, we're opening down. Opening down is the best position to be for long swing traders. Always the best position because you're not overextended. And in the pit, we're officially holding one stock. I'm not going to mention the name, but it's a very defensive blue chip stock. It's down like 50 cents. I'm perfectly good holding it, not having any issues with it. So let's talk a little bit about global data and what we have today. We've got the job openings survey. This will be important, and this will reflect into the Friday's employment report. There's not much Fed data. I mean, there's a lot of Fed data, but I don't think there's a lot of Fed data that's going to be new on the table. Basically, the Fed keeps saying, we're not there yet, we're not there yet, we're not there yet. They keep telling that dense kid, you ain't getting your bike anytime soon. Maybe end of the year, maybe later in the summer. We don't know. You're not getting it. You're not getting it. And the kid keeps going and telling all his friends he's getting that damn bike. Good morning, Rochelle, Steve, Carrie, and Richard. So he's dense. He's very dense, and he still thinks he's going to get that bike. Matter of fact, as of right now, the odds that are priced into the market of that kid getting that bike in the summer is still at, let me see where it is. Where is it? I had it here a second ago. Here it is. It's at 62%. So it keeps popping between 52 and 62 in that ballpark. And again, as we get closer to June and July, without any major evidence of a rate cut, I think this number is going to go down just like it did between January and March, when in January we anticipated a March rate cut of about 58 to 68%, and when it went down. So don't think that's going to happen. Don't think that's on the table. In terms of momentum levels, so remember yesterday? I'm sure you don't, so I'll remind you. 431. What does Uncle Roger say when we get into the 400s? You guys know what Uncle Roger says. It's time for a little sell-off. And where are we now? We went from 431 to 167. I haven't heard any GE news except for them splitting, which is really good for the company, but that's about it. Is there something else, Chris, that I'm missing with GM? Anyway, so as you could see now, there is no major overbought levels. There are no major overbought levels right now in the market. 23, 167, that's fine. That I'm not going to nitpick. Well, but it's still 5 times bigger. It doesn't matter. It doesn't matter. When you see this at 100, 200, 300, it just doesn't matter. But once you see it over 400, and it works the same way to the downside too, by the way, it tends to revert. Momentum just doesn't get, especially on Mondays, it's party time, sell-off, baby. Exactly, Adam. There you go. I love that. I got to get a t-shirt that says party time, sell-off, baby. And by the way, I'll be live at noon and at 1 today, so you want to be there. So you can see here, you could see momentum levels have declined, and markets are not overbought anymore. Well, Remember, I said sectors are getting more in balance with each other, which means they'll be able to move. Let's see if there's a difference between yesterday and today. Uh, does anyone else or entity? I don't know. I would imagine Vegas does. I'm sure you could make bets on it. Probably how many rate cuts are going to happen this year. That's something like that. I would imagine Vegas. But why do you do that? You can bet in the market. You could just short bonds. All right, let's look through our list. Let's see how we're looking. So let's see. Moment of truth is here. Okay, let's see how we're looking. All right. Remember, crypto's on its own. It's an island on its own. But let's look here. Energy utilities. Okay, that looks pretty good. But then you got retail here. All right, I can work with that. But then you got Russell 2000. Retail and Russell 2000 don't belong here. Mid caps don't belong here. So if we took retail and Russell 2000 and mid caps away from here, it can work. But they're here. But then you got material, financial, healthcare, real estate, no, communication services up here, and then all the discretionary. So industrial does not belong down here. Industrial belongs with basic materials. Russell 2000 belongs right here with the speculative stuff. Now tell me, why is retail up here and home builders down here? It makes no sense. So they're still fragmented. The market is still maybe one atom right around November-ish, around the election time. So to show you how this is supposed to look, technology's good, QQQ's good. This does not belong here. Sticks out like a sore thumb. Consumer discretionary belongs here. Home builders okay. Semiconductors okay. Consumer staples definitely not. Where's QQQ? QQQ's all the way down here, so that's good. Then you've got S&P 500. Then you have the Dow Jones. That makes no sense. And then you have communication services. No. Communication services. I dare you to tell me that Meta and Google are not technology companies and they don't belong here. I know we can argue for an hour, but they are. Consumer staples goes here with financial and healthcare and basic materials and energy and utilities. So retail is off. Russell 2000 is off. Mid caps are off. All these belong down here. Up here, we should have energy, utilities, basic materials, financial, healthcare, maybe real estate, Dow Jones, consumer staples, and industrial. So things are still out of whack. When things are out of whack, it means markets are fragmented and they lose rhythm. What is loss of rhythm? I told you yesterday. Have you ever seen a white Jewish guy, that's me, dance? That's no rhythm. Imagine Larry David dancing. It's not going to be pretty. So markets need a little bit more downside so they can regain their composure, okay? Let's talk a little bit about levels like we always do in the morning so we could see where we're at. And by the way, these have been very, very helpful to give you guys context so you guys know where we are in the big scheme of things. I have not changed these lines in weeks, so you can't say that I curve fit them. They're not curve fitted in any way. I just draw them to show you where we're at. We made an all-time high yesterday, and what happened right afterwards? We gapped up to an all-time high, and then we just went straight down the entire day. Not good. So I'm hoping today we gap down, and then we start coming back up. But we're now all the way, as you guys can see here, we're now in the third quadrant. We're not in the top. We're not in the house. We're in the doghouse right now. And here we get back to the consolidation. So the levels you want to keep an eye on today are 521, high 520s. You want to keep an eye on 517 and a half. If we go back into this range, the odds are we're going to stay here and we're going to come back down here. And then the market's going to get really congested. And when it gets congested here, that's when you get the defragmentation. We're out of whack, but is the resource in whack list to show what shouldn't move together. Richard, we have that. We've done that, and we go over it. And I just showed you. And I it's not which ones should be together. It's it's the aggression. Let's see here. Hey Brian, do you still have that sheet? Do you still have that sheet that we worked off of that shows the ones, the twos, and the threes? If you do, send me an email of it, and I'll forward it to Richard. But Richard, there should be level 1, level 2, and level 3. I go through this in my. If you show up, I have it with color coded. If you go into my VIP room today at noon and remind me, I'll show it to you. But it's risk level. It's blue chips, medium risk, high risk. That's how you should have them. If you can email me that Brian, I would appreciate it. Thank you. If you don't mind, thank you. So I've gone through this, Richard. I've gone through this, and I'll go through it again. So the question is, are we going to stay in this level or are we going to bounce back to this level? I don't think we're going to make it to all-time highs today. I don't think there's any major catalyst. And I don't think the jolts or the factory orders are going to push us in that direction. We do have a lot of Fed speakers, but I'm not seeing anything major, especially before 10 a.m., especially with the market looking like this. But again, you want to look at that. It erased all of my color coding. Look at that, rascal. Oh, well, I'll have to do it blind. Okay. So I think we're going to either stick in this level, I don't think we're going to go above 522.85, and I don't think we're going to go below 520.80. I think we're either going to stick in this level today or this level for the S&P. And if I were you, I would make, it's all good, Richard. I get it. Thanks, Brian. I think we're either going to go, I think what's going to happen is this. I think we're going to go into this level today and start bouncing back into this level. I think we're going to go here and bounce here. If we go in here and it doesn't relieve and we start going towards the bottom here, we can expect to go in here. But I think notice how we went into this level and we bounced hard right here. Right here, look. Right here. We went into, I'm just narrowing it down. So we went into this level right here in the morning, overnight, and look how hard we bounced. So I think we're going to try to stick into this level today, which means the high would be about 522.80 and the low would be about 520.97-ish. And again, these are not exact, but they're pretty close. So keep your eye. If I were you, I would make a screenshot of this so you always know if we're in this area, if we're in this area, if we're in this area, or we're in this area. So this is the SPY. Looking at the QQQ, and remember, I'm not changing these lines for a while. So they haven't changed. So look at QQQ. Here's the all-time high. We couldn't rally there yesterday. Now let me just extend this to show you how powerful these lines are. This is yesterday's high. I drew this level about 3 weeks ago for you. If you don't believe me, just look at the review from yesterday. Nothing changed. That level was right about 447.30-ish or something in that neighborhood. That was an all-time high. I mean, the swing high. When you should ETFs, but what criteria are they sorted? 1 week high, the strongest here. This is the high. This is strength over the last 5 days, right here. Just percentage gains. That's all it is, right here. This is 1 week, 3 weeks, 6 weeks. So I want to see the strongest gains over 5 trading days. Just percentage increase, percentage decrease, Marge. Nothing different. Here, let me give you guys this code. Here. Oh, it's too many letters. It's not letting me do it. Sorry. Too bad. I wanted to cut it and paste it for you, but it's not letting me do it. It's too many characters. I should have known better. Anyways, if anybody wants it, it's in the VIP members area, or you can email me and I'll give you the stock fetcher code. Anyhow, it's not a big deal. The analysis, understanding how to use this stuff is the big deal, not these tools. Okay, so just so you understand. So look at how QQQ is. We tried to go up to this level yesterday at the opening. We couldn't muster through. We broke down and we basically went down all the way, and now we're trying to decide if we're going to stay in this level or go into this level. Pretty much same thing with the QQQ. So keep your eye. The level here is 443.80 and 447.50. And here and all I'm doing is just extending these lines. I'm not doing anything differently. So are we going to be here today? Are we going to be here today? Or are we going to try to poke the bear and come and make an all-time high like we did on Friday? So yesterday, notice this level. Every time we come to this level, right here, right here, right here. When did I draw this for you? Long time ago. I just keep moving it forward. Look at my video. You'll understand exactly what I'm saying. It's pretty cool, right? We hit the high. We were able to navigate the high 3 different days using this bar. This is why I keep telling you guys you should write this down and use this in your analysis. All right, let's look at the Dow. How does the Dow look through all of this? All right, very simple. We made an all-time high yesterday. I told you that the Dow was the strongest. We were in the upper range. I told you yesterday blue chips are by far the strongest, followed by mixed, by S&P, followed by QQQ. Why? Tech is cooling off. But look at this. Drew this for you a while back. Look at this level. Look at this. This is the low from Friday. Yesterday we opened here. No, this, you know what? This may be Friday right here. This may be Friday. Let me look at real time. Hold on. Okay. This is yesterday right here. So we opened again. We couldn't test this high. I'm going to draw a line right here. We got another level here. Okay, there we go. So now the Dow is still in its first level. All right, it's still in the living room. The Nasdaq is in the bedroom. I mean, excuse me, the S&P is in the bedroom. The Nasdaq is in the doghouse. So let me show you again. This is the Dow. The Dow is the strongest. You can see we're still in first here. We haven't broke this. Do you want to keep your eye on this level? You better believe you do. 392.42. Today's Tuesday, so it was on Friday. Right here. If we break this level, we're going to break down. We're going to break down, but the Dow is still blue chippy. 392.44 is that level. 39,244. You better be writing it down. So the Dow is the strongest. The SPY couldn't stay in the first level. It's already in this. This is the first level. This is the second level. This is the third level. So the SPY gaps up, makes a swing all-time high, and then just comes right back down, but doesn't even break the second level, goes all the way in the third level. So now the rule is once we enter a level, we tend to traverse to the other side of that level. That level is 517.54. Keep your eye on that level. And then the QQQ, which is totally in the doghouse, is already not in the first level, not in the second level, in the third level. You know what? I got to draw another line here because there's a resistance right here. There's a support right there. So again, are we going to break this level here? Are we going to kiss this level? Are we going to stay in this level? Make a screenshot for yourself or write down these levels. It'll keep you. It'll keep you. It's like having a compass and knowing in the big scheme of things what you're faced against. Okay. All right. We're at 442.90 right now. So all of these levels, I would watch them because if you break this level, the odds are you're going to test this level. If you break this level, the odds are you're going to test this level. You guys understand what I'm saying? It tends to traverse from one level to another once it breaks it. So those are the key levels. Let's talk about the global market. All my stuff that I drew this morning, it's all off now. How dare you? All right. So we got job openings today. Comments from the Fed. You've got ISM. Yesterday we had ISM, construction spending data. The data didn't really do much for the market. We now have a 62% chance, which I laugh at this, of a base cut in June. I think this is silly. We've got job openings reports today. It'll be very interesting. It'll be a prelude to what we have going on Friday. We also have factory orders today. Important report. Both of these reports come out at 10 a.m., which means you're obviously not going to do anything at the open today, right? Oh, my pleasure, Adam. Europe is giving us a little bit of tailwind. They're digesting data. China is not doing well. Just yesterday, they were killing it, but closed below flat line, notching the biggest daily gain in a month on Monday. Software and tech hardware led the decline on Tuesday. Real estate stocks retreated, so they're not nearly as strong today as they were on yesterday because they're always following us. So we're not getting that tailwind we had from them. Also, the property company declared no dividend payout for the first time in 31 years. That's very, very bad. So again, they're in the crapper. Nikkei Gain in chip stocks helped offset in retail and shipping stocks. And the yen is weakening against the dollar on Monday to its lowest level of the year. They really need to start taking action, and that action includes raising their rates. I've already explained to you pre-market what the big catalysts today are. Healthcare stocks could be seeing a little bit of a downside, although I don't think the news is all that bad. So we may see a little rebound. And I also mentioned that Leonard Homes, these companies are very essential. They tend to move together. I have my eye out on Pulte Homes right now. So that's the stock that I'm looking at right now. Volatility. Volatility is not really rising all that much as of right now. I mean, it's going up, but it's not really. I mean, you could see it's not really doing anything crazy. It's still within range. It's not above 15. As long as it doesn't go above this level, we're okay. And the bond market, I know it's the first time we're talking about the bond market. You might have remembered somebody talking about it doing this and then coming right back down. Now, do I think this is a breakdown? Well, here's the problem. Hold on a second. Here's the problem. We haven't fulfilled this triangle yet. Do I think this is going to be a real breakdown? I don't think so. I think we're going to continue coming up here, and I'm going to just have to adjust this a little lower. I don't think that's a real breakdown. I think we're going to continue coming up here and lower, and it's going to be tighter and tighter and tighter, and then I think it's going to break down. This breaking down right now would imply that the kid is getting through his thick skull, that he's not getting that damn bike. The kid is still not getting it through his skull. Well, how do you know that, Roger? How can you get into his head? I'll show you how I can get into his head. Here. He's faking us out. Let me show you how. Oh, now it's highlighted for me. Well, how come it's highlighted now for me, but it wasn't before? All right. Here, because you have a 62% chance of a 25% basis point drop in June. If that was the case, the bond market wouldn't be breaking down. The bond market breaks down when interest rates go up. This should this should be at 40-30% if that's the case. So there's still a major disconnect. So what's putting pressure on the market? What's putting pressure on tech? The bond market. Do I think the bond market is ready to break down? No. And remember, we don't have a major report today. If this starts really breaking down, it's going to put pressure on blue chips. And it's going to change that ratio from 62% to 30%. But I don't think we're there yet. So that takes us to today's stocks. Let's talk about today's stocks. All right. Got my morning list here. See, you could see the breakdown right here on the TLT, how it's breaking down. I don't think this is it. I don't think we're there quite yet. I think it's going to revert back down. Revert back up. It could be. It could be. I mean, no one says it can't break out before finishing this up. I'm just saying I don't think we're there yet. I think that there's more time for plausibility from the Fed before June. But I'm not going to argue with this market. I just think if the bond market is breaking down, why is the Fed still pricing in the 62% chance of a rate drop? This means interest rates are going up. This is a direct bonds going down means interest rates are going up. So I don't see how that's the case. I know. Call me crazy, but that's how it works. So stocks to the down. I'm going to talk about stocks to the downside. I'm going to talk about this pretty quickly. My suggestion is to write these down as I talk about them. A lot of these are repeaters. I'm a boring guy. That's how it works. We're breaking down on the Brazilian EWZ. Although I'd like to see a little more of a breakdown. This looks still like it could be a little random. I'd like to see us come down here a little bit. BRZE. I gave you this stock yesterday. Actually, somebody reminded me of it. And it went down pretty good. This is a purposeful downside action. That's the kind of stocks you want to sell that are moving down purposefully. Oh, here's another stock. You might remember this one. I don't know who, but somebody gave you this stock yesterday as a bonus in the VIP room, and the stock is already down $2. Who could it have been? Don't say I don't give you guys good stuff. There goes my dogs yapping again. Be careful. We have the 200-day here, but you still have a little more downside. You don't want to sell stocks that are looking like this to the short side right now. You want to sell stocks that are looking like this to the short side. Purposeful, aggressive. A little more aggressive. This is not aggressive enough right now, but I do like the volume here. So I'll I think it was me, Richard. Look, 301. I'm going to give you a bonus Lulu trade. It's a swing trade right there. Yeah, Lulu's down. This is very nice. I like this. GL looks very nice. Hey, remember this one? Do you guys remember this one? Still on our list. I'm glad to hear that, Penny. Yeah, don't think I keep stocking the same stocks over and over again. You know why? Because they keep going my way. If they don't go my way, I wouldn't have to stock them. So the more stocks you hear me repeating, that means the more accurate I am. Don't like this one. Forget it. Don't like this one. There's better shorts out there. Four. Shift for payments. Now this one's about to break the 200-day moving average. I would put an alert like right here at 63 because if it breaks, ba-boom. You're welcome, Anastasia. Pen, not with two ends, this time with one end. See how it's breaking below? Want to see a little more breakthrough. Don't be afraid to see more downside before going in. The more they break, the more investors will see it breaking down and start selling it off. Nike. Nike. Especially if things aren't good. And remember, one of the reasons why the stock gapped down was they had pretty good news, but they said they weren't doing well in China. China's a huge Nike consumer, and China had some negative news today. Last one. Love, 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 love how it's breaking down the 100-day line, and I think the target is the 200-day line right here. All right, let's switch focus to the long side now. Crocs. Look at that trend. Nothing can stop us now. I'll be talking in the VIP room today about energy stocks, and I'll be talking about my favorite three energy stocks. So you don't want to miss that for sure. This looks like a nice breakout. I like energy stocks right now, and they tend to be defensive too. RNA. Nice breakout here. Nice metals. You want to be defensive right now. Resources look good. RJF. This financial company looks good. Really good. OBV. A few days ago, I gave Matt a list of stocks. He's like, three-quarters of all of these stocks are insurance stocks. So we'll see how insurance is. But this one, OVV, PGR, Progressive. Speaking of insurance stocks, beautiful. Look at that. Beautiful, beautiful. These are beautiful stocks. I'm giving you guys a lot of really pretty stocks today. Nice stock, good volume. And notice not a lot of chop with these stocks either. Nice stock. Now, a few more. EME. The stock looks pretty good. I still like Sigma. I almost bought Sigma yesterday. It's down 2% right now. These are the stocks you want to see. Now, if you start seeing it hitting the 8-day EMA today and bouncing off to the upside, that's a good stock. If you see it breaking down below the open and just listless, you don't want it. So don't try to be a bargain hunter today. Now, caveat, TAX, hold on, TXRH, Texas Roadhouse. This is a great place. I used to eat there here when I used to travel from Las Vegas to Los Angeles. There's one right on the way. Beautiful stock, beautiful swing. I'm giving you guys really nice stocks today. I gotta be honest with you. Now, caveat. Remember I said don't go really like speculative right now. This is not the time. There's an exception. The exception is XLC, which is the communication service sector. Remember, this sector was right here. When we went through our list, through our short list, communication was up here. All the other techs were right here. So there's clearly some buying going on here. Out of the tech sectors, this is the only sector that I like right now. Okay. XLC, be careful with it. Be careful. But it is still moving up. So I'm going to keep recommending it. Matter of fact, I think we went long in one of our programs, this sector yesterday in Bargain Hunter, I think. And then as far as speculative stocks that I still like Amazon. So mostly favoring blue chip defensive stocks. The only sector that I like that's speculative right now is communication, XLC. And the only stock that I really like right now is Amazon. And Amazon happens to be a consumer discretionary stock, not a communication stock. So I just want you guys to remember all of that. Now, let me just post this here and tell you something. So as we step into the second quarter of 2024, emotions are running high. Questions are swirling. When will we see a rate cut? Are concerns about trajectory keeping you up at night? Probably, regardless of your current market sentiment. My aim is for you to enter this new quarter not just ready, but brimming with confidence. Yes, I said brimming with confidence, equipped with good tools and a robust plan of action. That's why I'm inviting you today to an event called Fresh Highs, a second quarter market outlook. I'm going to give you all my prognosis today for second quarter, top stocks, bottom stocks, what the Fed will do, all of that stuff. It's happening at 1 p.m. Last time I did this was before last quarter. And that's when I gave you my top stock, my bottom stock, my weakest stock, my strongest stock. That's when I gave you that stock, that Humana, that dropped 100 points in the last 3 months, in the last quarter. I'm doing it again today. You missed out on Humana's 100-point downside last time. Don't miss it now. Join me today. It's happening at 1 p.m. My favorite stock, my favorite sector, what stocks I think will go up, how many interest rates will go down. It's all happening at 1 p.m. And remember, if you missed out on Humana, a 100-point drop on Humana, don't miss my presentation today because I may give you another Humana. You never know how the balls bounce. I'll see you guys later. Have a fantastic day. If anybody has a trading question for me, not a customer service question for me, reach out at roger@rogerscott.com. Speaking of customer service, Cam White, who's on this call, runs a program called Customer Service Live. If it's available from 10 a.m. to 1 p.m. Eastern time every day, Monday through Friday. He's not just going to talk to you on the phone. You can share your screen. He'll set you up. The feedback that I've gotten from Cam has been almost as good as the feedback that I got from people who are in the trading pit and Pro Trader Dashboard. Yes, that good. So please, please, please hit him up with anything really. I am completely stupid and inept in dealing with any customer service questions. This guy's a rock star. If you have a trading question, come to me. If you have a customer service question, go to Cam. I'll see you guys later. Have a fantastic day today. And if I missed anything, let me know. Bye, guys. Have a great day today.